Dustin Garrow, how are we, sir?
Good. How are you doing today, Matt?
All the better for seeing you. It's been far,
Well, that's
far
good.
too long, far too long.
Yes.
And do you know what? And wait. I would love to have spent a bit more time with you at WNA. It seems so long ago,
Oh,
but I am definitely intrigued as to what you learned, who you spoke to, what you now know, and can you tell us?
the more I know. Well, first of all, WNA has now been transformed into the WNA week.
Yeah,
It's not just the couple of days of the conference, it's all the other, certainly the financial investment groups that have lunches, dinners, meetings. So you're really at it for the full 5 days. And the other is the participation. Last year I think there was 800, and that was by far and away a record. This year was something over 1,100, and the other is kind of the makeup. I mean, we had some of the smaller, say, Japanese utilities there, but for the first time, the African countries had some senior, atomic energy ministry type folks. So that was different. And then the other thing is Microsoft, joining the WNA, and I've heard they're on the executive committee now. So they're kind of moving up to help drive the boat. So, again, we're seeing that more traders becoming involved. And so it's a different mix as we move into what I think is going to be a different market than we've seen maybe ever in the industry. And the other thing is, I had a time with one of the senior CEOs of a big supply company, and he made the observation, as Urenco has said just in the last couple of days, now the industry has to deliver. We're way beyond the forecasts and the spreadsheets and the blue sky apparently Grant Isaac had a fireside just today, and he said you can't put a stock certificate into a reactor. It's one of my favorite themes. That now it's you've got to the rubber's meeting the road, and it's not just incrementally. I mean, all of a sudden the demand side. Everybody goes, "Oh, the demand story, yeah." That's not to be ignored. I mean, from what we're seeing, and it's the utilities. I mean, it's Westinghouse apparently signing a memorandum of understanding with Slovakia, which would mean chemical fuel, I would think, but also the data center industrial developments, the Fermi America project, which, with former Governor Perry, former Secretary of Energy Perry, behind this, it's, like I read an article the other day and it said they just started in January and they are just going full speed ahead with the new IPO, which raised, I think, 500 million, 550, so anyway, fairly noticeable amount. But, they want to build 4 big reactors. And Westinghouse, of course, has stepped up and raised their hand, which makes sense. But that's starting to, kind of add a new, increment on demand. And nobody knows what that means. As we hear more and more, Google is looking at putting data centers around the Duane Arnold reactor, which has been permanently shut down until it isn't. So I think, again, the recommissioning, we've got Palisades, TMI-1, we've got that going on, but that'll only go so far. So I think, and then looking at the WNA market report, I sat in on the uranium subcommittee, which is always fun because there is a growing discussion amongst the group on, is there going to be enough material at the right time to match up kind of with the demand forecast, which, by the way, their uppercase now is very, very vigorous. I mean, I looked at the uranium requirement in 2040, and it's 530 million pounds just in 15 years under their uppercase. And the reference case is 390. So, I mean, we're talking a big change from our current 160, 170. So, I think that's the point, is a lot has to go on. But it's been that, realization now, I think, by a number of the utilities. Part of it's coming out of the presentations, I think, at the conferences started in April when, UX gave a presentation, Jonathan Heinz, and basically said there's a need for a lot more fuel and the investments aren't being made. Full stop. So something's got to get this moving forward. And then in July at the NEI one-day conference, Trade Tech gave their outlook to 2040 and kind of simplified it and said, well, if there's nothing built in the way of uranium production facilities, the deficit's 100 million pounds in 2040 on very minimal growth assumptions. So that's another kind of point. And then the WNA report, which is always, there's, contentious discussion, but it just shows major gaps in the availability of uranium. So that, I think, was another outcome of WNA. I came away with a different feel than I thought I'd have when I went in, just because it's this growing realization of the need. And we'll get into it, I'm sure, but it's fine to have existing projects you can expand incrementally. It's fine to restart some projects that's been a bit of a, a little bit of a bumpy road. But now you have to have greenfields. You cannot get to where you need to be without brand new greenfield projects. And that's been a bit of a difficult area for the utilities. Yeah, just to finish off with that, keep in mind, in their defense, post-Fukushima, there's really not been much in the greenfields project area. We have DASA, but there's just not been a whole lot. I think the last major facility built was Husab, and that was all Chinese. And then before that was a 4 Mile as a satellite to Beverly. So, the current crop, let's call it, of fuel managers, many of them are post-Fukushima, and they've lived in a world of abundant fuel. So obviously the conversion enrichment issues, kind of shook them a bit. But now it's uranium. So when they were looking at term contracting, they were very reluctant to discuss contracts with a greenfields project. I had some of them tell me, oh, we'll only contract with an operating facility. Well, that's becoming more difficult for them. But now just recently, we've had RA Energy do a contract. We had Bannerman do 2. DASA has been doing, a couple. We have NextGen. But so I think that's beginning to open up the greenfields area, but except for the NextGen agreements, fairly small, and the pricing is not something that's going to really support a lot of new production. And just so you know, I've not listened yet, but I just saw something on Grant Isaac's comments. He says you have to have triple digits. Without that, we're not going to make it. We won't deliver. Now, he didn't say that about Cameco, but it looks like on the supply industry. So, that's kind of where we're going. You and I have talked about this for years, and now we're kind of there. And it's the spotlight's on the industry that they have to, come up with. And it's from the reactors throughout fuel. I mean, it's not just the uranium side. So very, very interesting times.
It is very, very interesting time. But I like you, I kind of came into the WNA thinking I'd hear certain things like continue to talk about, AI and data center power appetite. And obviously Microsoft there was that was the thing people were whispering about in the corridors because of the sheer quantum of the money that companies like that can bring to the table. But, don't forget, they've been members for, past 2 or 3 years, now, but actually turning up was the new thing here. But the thing that interests me is there's so much uncovered demand and there's so much risk exposure for the utilities, and ultimately it's going to be the utilities driving this, certainly from a US perspective. And I'm interested in what they were talking about, what they were thinking about, because they're looking for grid stability. They need kind of firm capacity complement to their existing energy. Nuclear will take a while to kind of ramp up, not least of all because of the downstream enrichment component is just not there yet and won't be there anytime soon. So how are they measuring things up now in terms of that uncovered demand versus obviously this kind of general mood and access to capital for these build outs which will be required?
Well, first of all, on the uncovered side, the Department of Energy's Energy Information Administration did finally release their annual uranium market report. And, now it is data effective the end of last year. Okay, so it is December of 24. But, unfilled requirements, 28, 29, more than 11 million pounds a year. And when you get to 2030, it's over 20 million pounds. Now, this is just the U.S. reactor fleet. Okay, so there are pretty substantial uncommitted needs. Now, keep in mind, if we've talked, the utilities don't group think, and it's even getting more so. There are those that are, we've heard it before, and the producers, they're born to produce, and they'll show up. And yeah, I've heard a couple of them say, well, we're just waiting, particularly on the Greenfields group, who blinks first? And I think we saw a couple of them blink a little bit on their latest contracting, was probably a little bit below the reported price levels. But then again, we can talk about that. What was $80, now it's kind of keeps, I heard the term the other day, grinding up to 82 to 84, but we probably should touch base on that. But there's some of them that are, kind of not lackadaisical, but they're not in a, let's call it any kind of a panic. It's like, yeah, I need to look at the market and I need stuff maybe 28. So, and then on the other end of the scale, there's some that are going, oh, we believe that there's going to be a true supply crisis and we're out contracting. And some of them have been out in the market the last couple of years, periodically taking bites of term contracts that are available. So, I mean, there really is an interesting spectrum, but I'm hearing more and more of I've got unfilled needs, 28, 29. I really now need to start looking at that. And I think some of it's coming from their management as they're looking at these above market power purchase agreements. They're kind of saying, well, what about fuel? I mean, are we actually covered out there? And I know a couple of them have what are now being termed very long-term fuel programs. It's kind of a secondary strategy to their main reactor fueling. But, well, this unit looks like it's going to, need to produce for the next 20 years for a purchase power agreement. And yeah, we really need to start looking at how do we cover that off? And they're finding it's not so easy. The suppliers today, I think have been obviously holding the line to a great degree on pricing. We've not seen a panic on the term. I'm using term only. As you know, spot is a bit of a different creature. But I think trying to design a 20-year, let's say, uranium contract, do you have reopeners? Is it base price escalated? Is it, on and on? It's a different type of contracting, which we've not had any experience at. So,
I mean, does it open does it kind of open the opportunity or risk that contract premiums could escalate? I think we call it backwardation. So I think that's the phrase anyway. because you're going to have, because I think what we're seeing is, and if you look to the WNA report, if you read through
Mm-hmm.
that, it says actually based on the current mines, it covers 90% of reactor requirements. What it doesn't say, or if it does, it's in very small print, is the fact that that is assuming everyone operates at nameplate capacity or is indeed in production. So there's some high risk strategies being played by utilities potentially if companies either default or try to renegotiate price because the market just isn't, well, spot price isn't moving, and they're going to demand better and better contracts to actually keep things going.
There are those consumers that believe it should be production cost plus a modest profit margin. That's what they deal with at time. If you're a regulated utility, that's kind of the culture that you've had to present to your state regulator. Here's our cost, and we need to make a little bit of a profit here. And okay, then you can charge for that. I think that more and more I'm hearing, and you kind of alluded to it, a scarcity premium. In other words, my view would be the production cost plus a modest return is the floor. And then if the material is not readily available, or the producers need to have more of an incentive, then you get into the scarcity premium area. Now, that happened in conversion and enrichment. I mean, I was at Converdyne when we were selling well below $10. And now with the conversion price at still 50, I think there's a scarcity premium in there somewhere. So I think we could move into a phase of the uranium market where that's the case, where a supplier goes, well, yeah, you look at my DFS and it says this, but I'm not selling at that. Why would I sell at that price? Because the market is here. And so I think that's going to be another major negotiating position that the suppliers and the utilities are going to have to work their way through, is we're not selling at cost plus a small return. Why would you? You sell at market. It's what the market will bear. And that's going to cause some problems for some of the utilities. But I think going forward, I think we could see a period of that scarcity premium coming into play. And if you don't want to pay it, well, okay, then don't pay it. I mean, that's okay. But again, the utilities, are on that spectrum, of yeah, it seems to be okay, to no, it isn't. It's going to get worse as we move forward. So,
but I tell you what I'm seeing, and probably we're going to jump around a little bit here but there's such clearly a big topic, and there's a lot of moving parts here. But just sticking with that thing, like what I'm seeing is that companies are raising big money. We've seen Energy Fuels $700 million this month. The terms were insanely good. UEC's raising money, but lots of companies are going to the market and saying, we need some money because we believe that things will move forward. Of course they would. They're incentivized to utilize the best argument that they can. The DFSs will look fantastic. Will the DFSs deliver what the DFS says? Maybe not in all instances, but nevertheless, those uranium companies need to run with this. But more importantly, the capital markets, these big funds, I'm talking BlackRock and Goldman's and big banks are buying this. So that's great for some companies. What we're not seeing, that's what I'm asking about the utilities view of life, is they don't seem to be buying the same thing. So if the industry is saying we still think we're in control here, but the uranium companies are saying, well, maybe you're not. And obviously, I know I'm not. I should be focused slightly downstream on the enrichment side of things as well. But it's very sort of telling that both sides think they're in control. And I'm wondering where this comes from, because you've got existing aging mines. We know the development of new mines is capital intensive. The money seems to be there for that, but it's still slow and subject to permitting and, as we know, too many examples, geopolitical risk at the moment. Do you think that how quickly do you think that scarcity component comes to bear, actually is visible?
I think, well, as you say, the utilities will be the principal driver of the market. And I think we have a conference coming up the end of the month, the last one of the year,
Right.
the International Uranium Fuel Seminar in Charleston, which all the U.S. utilities will be in attendance, which they tend to not be in London. Now, again, the U.S. market is not the only market, but it's a big component. So it wouldn't surprise me if we start to see increasing term activity after that conference. We already saw several U.S. utilities come in the market, do some relatively small term contracts. The big one was Korea, and the offers were due there mid-September. Nobody seems to know anything about it. That was almost 900,000 pounds a year, starting in 28, I think. So it would have been a big benchmark. But the fact that there's nothing really leaking out, there's discussion that they may not have seen what they would call conforming offers. So we'll have to wait and see. But, we could see quite a bit of term activity before the end of the year. And I think then that will tell the tale if the utilities go, oh, no, people want, $92. And the word on the street is, we're talking, again, back on the published price, when it was at that 80, 82, there were bids just below that. And we know kind of who was doing that. But then there was a variety above it. There was apparently a number at 84, 85. And even a couple of the larger suppliers were in the high 80s. If you want some of my material out there, it's not $80. It's 88 to 89, and I'm not offering a whole lot. So, what do the big suppliers do? What do the Kazakhs do? I hear they're not that active in the market. And I hear Cameco is not that active. And Orano hasn't done a contract since the invasion. So you've got more of the discussions around the mid to smaller companies that, and some of them are more willing to say, oh, okay, I'll do a couple of starter contracts at slightly below the published price. But that's kind of where we are. It's in that phase of the market. And the utilities may step back, which may prove to be fairly risky. But that's why I say we're kind of now moving, in my view, into uncharted waters, where we have different, you mentioned the data center guys. Yes, they're going to use gas because they have to. They have to move forward. They can't wait until the SMRs are available in 2029. But I think their plan is to transition to on-site SMRs. So, they'll do whatever they have to do to get going, but they have, bigger plans. What I guess it was Zuckerberg said a couple of weeks ago, they got 200 billion, and he's going to spend it. They have to build the data center. They can't just wait. They'll get steamrolled. So that's going forward. Now, can they hook up to a reactor? Can they hook up to a coal plant that stays around for an extra 5 years? Could. Again, I think they're looking at all of that. But I've not heard any of them go, oh, yeah, nuclear, nah, we're going to stick with gas forever. I just don't think that's going to be the case. So it gets back to the industry delivering. How quickly, look at all the SMRs. Everybody's, oh, yeah, forget it. 2030 and beyond, it's a pipe dream. Well, now they're kind of everywhere. Look at Rolls-Royce is signing up SMRs. You've even got the big programs, theoretically, like Italy, where we want some big reactors, but we also want SMRs. Africa, why are the Africans now at the WNA? SMRs, they're not going to build huge, 1,000 megawatt plants. But boy, SMRs, they like a lot. So the US, we're not going to build big units here. I'll bet the SMRs, if they come into play soon, are going to pick up a lot of market. So that's kind of, but yeah, that's what I said. The data center guys, you just have to be careful. We don't know. Do they go, we'll come into the fuel cycle? There's those rumors. We'll invest. Do we need uranium? We'll buy a company. We'll buy a mine. We'll buy an inventory. We're not going to not do it because it costs money. We've got the money. So, but yeah, there is this interesting disparity. And on the utility side, are they all out raising 5-10 billion to build that next big unit? What I'm hearing is some of them are now getting together, as they did in the old days, where they looked at Vogtle 3 and 4 might be too big of a bite for one utility, but maybe 2-3 utilities get together. Palo Verde. It's not just Arizona Public Service, but Southern California Edison and Salt River Project. And, is that now going to be the wave of the future where then the money becomes available and it lowers the risk? So we'll just have to wait and see.
Yeah, I agree with you. These are uncharted waters. These are interesting times, and I kind of want to close off the utility component, or because you're the guy with the experience on that, which is that they've always been very good in terms of this just-in-time strategy. Don't spend money before you need to, and like the whole market used to work. And I'm wondering if they're going to have to get used to a slightly different way of getting some certainty over line of sight of their total energy mix. I can, however, see where they are slightly challenged in the sense that the US government has got so behind this space. You've got a total between US and private investors over $9 billion spent on SMRs since 2019, with 9 different systems being tested in the US alone. So there's a lot of work on this, and there's a lot of regulatory work that needs to be done as well, not just in terms of the design and technology, but the regulatory component here. How much more will the US government continue to fund and invest into? Because it seems to be very good investing into kind of critical minerals, mineral security at the moment. And I think energy is a big part of that as well as a derivative of that. So I can see why utilities is like, well, hang on a sec, let's not go too early here. We might be missing out on a payday. We might be going, we might be making these decisions unnecessarily. So I can see the hesitancy there, but at the same point, us investors are looking at it going, guys, come on, this is a great game of poker, but you've won already. Could you please, for the love of God, make some choices, get these term contracts signed, so that our investments can actually make some money. So we're very, very biased in this. But again, you talk to these guys, and these guys, and are they still just looking out to sort of see where the dust settles? In fact, will the dust ever settle? Is the US government gonna stop at some point?
Well, again, it gets back to my point about uncharted waters. It's not just for the suppliers, it's for the consumers. All of a sudden they have data center demand. They've got, everybody wants more reactors. They want to, I think that, and a lot of them have been, hey, the reactor fleet is what it is. I mean, there wasn't a lot of construction going on for how many decades? So it was just fuel what you've got, do as good a job as you can, keep the costs down. And now you're saying, wait a minute, you've got to look at expanding. In fact, what I'm hearing is the data center guys, they don't sit down with the fuel managers. They're upstairs looking out the window at the view with the senior utility executives going, well, guys, we're here. What do you think? And these are guys that have not had to go out and raise a lot of new capital for a very long time. And it's great. The Biden administration was very pro-nuclear. We have Trump 2.0, very pro-nuclear. Well, it does, we have an election coming up. And what happens when President Newsom comes in and he goes, we're not spending, this is for private industry. We're not spending money. Somebody gave a presentation at a uranium conference in Casper in August, and they had the audacity to say, the government is kind of your last resort on the budgetary side. They can clean up the regulatory issues and be, supportive, but you can't look to the government for long-term financial support. That can go away, as President Obama said, with a stroke of a pen. And so I think the utilities are smart enough to go, yeah, we got to, there's a wave here. Is it a tsunami? But, we've got Vogel 3 and 4, wasn't the best experience. So, utilities are not known for being wild-eyed entrepreneurs. And that's part of the cultural difference between the data center group and the utilities. You could not find two industries with more divergent culture and DNA than those two. That's why there are folks that say they will only put up with so much from the utilities. Remember, they want to behind the meter. They, run me an extension cord to that reactor, but I'm not hooking up to the grid. Come on, give me a break here. Where they might just say, again, fuel cycle, they'll look at the fuel cycle. Are there issues? Yes. What does it take? Money. Okay. And they can come in. They won't be like a utility going, well, I could sign a term contract, but it can only, 25 cents on, these guys will go, what does it take? I've got my debit card. And, that enrichment plant that was proposed in Idaho, what's it take to build that? $5 billion? Okay. But I want all of the output for me.
Yeah.
Okay, now that's going to be where the rubber meets the road, where if the data center group shows up in the fuel cycle and just says, this is an issue, we're designed to solve problems, it's not going to be, we want to help the utilities. No.
Yeah.
No,
that's
I know not going to be the case.
But here's an interesting number that I saw in the WNA report from a couple of months ago, which was they're talking about capacity, and I'm referring to both our earlier statements, which is like capacity and actuality are two different things. But the capacity will grow from, I think it was like 372 gigawatts to 746 gigawatts, right, by 2040. That's effectively like a doubling by 2040. I think the U.S. government stated, I think it was it was the beginning of this year, looking to quadruple its nuclear
by 2050.
By 2050, right? So something's got to give. Either we're 100% reliant on the tech industry coming in and taking care of its own requirements by spending its own money, or the U.S. government's going to have to dig deeper into its pockets and release this, and get to a point where they engage with the utilities themselves and give them some incentive to kind of help get things moving too. But I can't see how you get from 372 to 4 times that by 2050 under the current scenario. Capacity means nothing unless it actually, comes into being. It actually delivers on that capacity. Currently, it ain't going to do it.
Yeah, well, keep in mind, we've got, the data center guys, okay? But under the Trump tariff regime, we are onshoring a lot of business. So, and the demand forecasts are unheard of for decades. When I was at the utility a very long time ago, it was 7% a year. Well, we ended up like 1%. But now everybody's going, wait a minute. No, we've got a lot of other businesses that you want them back onshore, be it BMW, Mercedes, whoever, building, really actually building things, ships, things like that. That takes a huge amount of power. Well, is that going to happen? We're still early days, but I think it's gotten the attention of, say, the senior management. You don't want like the data center guys coming in saying, we need X, and you go, well, we can't do it. No, they're going, hey, how to, so you've taken again an industry that's not known for being too quick on its feet, that had negative experience recently, and you're saying, well, now you've got to think different. You've got to approach your business differently. And it's like, oh, yeah, okay, but we got to have a study done. Is there a management consultant? You see all the management consulting firms in London, Accenture and everybody. Well, we got to hire Accenture, and they've got to do a study. And what's it? I don't know. I mean, I'm a lawyer, so
Yeah.
I mean, well, it's not an industry that's, like I said, has been populated with necessarily aggressive entrepreneurial thinking. That wasn't what you did. I worked there. You saved money. You counted your pencils every year. But the same thing goes for the supply sector. You've got a whole bunch of companies that were populated with management and boards that this isn't what they're there for. They were there to make sure we kind of kept going. And, now it's like, no, we need $500 million. And we got to hire 400 people, or, what are you talking about? So that's, like you say, how do we get to, 2050 and COP29? There's a lot of hurdles to cross, but I think the industry is going to try its best to deliver. But, it's an industry that was kind of beat to death. We weren't building reactors. I mean, look at Westinghouse. They went bankrupt how many times? Nobody was ordering big reactors. Nobody was buying uranium from higher cost facilities. Nobody was willing to invest in conversion. And now you're saying, oh, okay, wait a minute. Nope, 180-degree change. Let's go, guys. Get out there and get on with it. You don't do that overnight. Takes a bit of time.
Takes a bit of time. Yeah. I mean, the historic, what happened historically does not sort of help currently, because people will look back at something exactly, back in the day, you're building it all for the first time, and it was like, it's always going to be this way. And then all of a sudden it just, collapsed for obviously all the reasons we understand. And now sort of, the new generation is looking back and going, well, hang on, you've got these, huge, budget, but basically, in terms of budgetary control, it just wasn't there, right? You've got, concrete, steel, skilled labor, etc. You've got issues with regards to acceptance. Quite frankly, not everyone's going to want a SMR or a reactor in their backyard. I don't think that's kind of gone away. So it's tough. It's very, very, very tough. But let's. I'm just conscious that there's kind of so many things we need to kind of get into, because I think if you look at on the nuclear side, you've kind of got all these kind of regulatory and licensing hurdles. You've got technology execution risk. We talked about specifically with SMRs. We the uranium guys are experiencing these kind of huge commodity price volatility situations and market reversals. Not helpful. We have had supply chain issues, and financing has been a big problem, I think, up until recently, in terms of capital costs and cost inflation, etc. You and I have talked numerous times about geopolitical and trade risk, and these stranded assets. Niger, we've talked about, we're blue in the face about that. It's a long list of problems, but is it any more onerous than, say, traditional mining these days? Have a lot of the kind of uranium specific issues, not mining issues or build issues. Have they gone away?
Oh, I don't think they've gone away. I think they may be hopefully more manageable.
Right.
You're not going in somewhere where the hostility is such that, you're never going to get to where you want to be. So you go somewhere that's more friendly. And so you say there's the mining project issues, but then there's uranium. So that spooks, some, and, the regulatory side, I think in the US, I was at that conference in July, and, Department of the Interior, which oversees a lot of land in the West, They said, if you've got a viable, business plan, come and see us. And, we're trying to cut our review times in half. There's no reason why we took so long. But again, the administrations change, and that I think is always in the back of everyone's mind. Yeah, we'll get in there now. See, a number of the projects are getting the preferred review status, and that's great. But how many of them are breaking ground? We haven't gotten there yet. We've got restarts, but we haven't got that, say, new big open pit uranium mine that somebody's out there building in the west of the this isn't happening yet. So
not yet. Should we just, again, conscious of time, and maybe just sort of have a quick perusal over who's doing what, and I'm looking. I was just looking at before I talked to you actually. So what's going on in Niger? Obviously, it looks like they want to privatize everything, and the French are going suitably nuts. And Goviec, I think they've had the extended arbitration pause. So thankfully they've got their project elsewhere in Africa, Botswana. Global Atomic, likewise, just trying to get itself in a position where it can get finance, but it's going to need some certainty in country. Is there any thoughts on Niger or quite frankly, Namibia, places like that, as potential solutions for the kind of U.S. Demand needs?
Well, I think Niger is a bit different, obviously. The government's very close now to the Russians, and the Russians need uranium. They are short, so they're out looking wherever they can.
They're off developing some massive project in Siberia, which could change their fortunes potentially.
Yeah, they've been trying to develop that for quite a while.
Yeah,
extremely low grade, and I think they would need more than that. Have to wait and see. Namibia, we've not seen anything. Working with Deep Yellow, not any kind of questions on the government side at all. So I think that the mines that are proposed there should go forward if they get enough utility support, if that's part of the equation. It's interesting, the Kazakhs that have always stayed home are now looking beyond their borders for uranium. And I'm not sure what the message is there. Diversification, sure. But are they getting concerned about their own resource base? I don't know. The Uzbeks, they produce their 9-10 million pounds a year for decades. They showed up at the conference in Sydney, the World Nuclear Fuel Market, and now they're talking about going outside their borders. I'm not sure they've got the experience. They're going to have to tie up with somebody, but I'm not sure who that is. I think those are kind of new trends. Canada, we have Denison with Phoenix have their hearing in the next week or so, and they could move forward. They could be the first big project that moves forward without term contracts, because the MD has said they're very comfortable developing the project without the contracts in place. Do their finance sources say, wait a minute, we want to have some to mitigate the risk? Remains to be seen. So again, things are just kind of on that edge where that could start to change the narrative, where they went out and raised a lot of capital earlier, and they could just go forward and without any utility support. So, next gen's next gen. You hear every rumor in the world, that they'll be taken out, that they'll build the project on their own. But it is interesting, the word is on the contracts, they have a clause, those aren't effective until the project is in operation. So if it's delayed, they're not under pressure to deliver the material. and it is market spot price at time of delivery with a pretty high ceiling. I heard 150 escalated, so they're probably comfortable with that. Um,
Yeah.
so
Yes.
the U.S. Yeah, we've got a few things going on. We've got UEC bringing their project in Wyoming back into operation. Encore seems to be more on track than it was earlier in the year. But they've got what, a dozen contracts now, and I think they got Peninsula canceling contracts. So they had six, and now they have one, which I thought that was pretty interesting strategy. So each of the suppliers are different. Look at Paladin; they just said they had their 13th long-term contract. So I think they've got phase one, the 4 million pounds, pretty well contracted. So, hopefully things stay on track production wise. We'll just have to wait and see.
Yeah, it's interesting times in North America. As I say, next gen, we shall wait and see. It's a big chunk of money that they've looked to raise, and yeah, all sorts of rumors about whether that's going to be a $2 billion build or a $4 billion build. What we do know is there's a heck of a lot of uranium down there. So that'll play out as it plays out. I agree with you. I like what Denison's done, and they've kind of put themselves in control. And let's see what happens in October and December with the hearings. Peninsula, I've kind of long lost the ability to work out what the heck's going on there. Obviously, Wayne's pretty much gone. New team in town, and they've got to forge their own furrow for sure. Encore, some of the they're kind of, I think, getting a hang of their drilling. From the problems earlier in the year. And I think the standout for me is obviously Energy Fuels. Like, I think they'll hit their guidance of £1 million. And I think I spoke with Mark earlier in the week, looking to aim for 2 million or a little bit more next year. So he's confident on the uranium front, but obviously the rare earths do obviously take front stage at the moment in terms of the valuation. It's interesting. For sure. So you kind of skipped through Deep Yellow, but how can you just give it a bit more detail? How are they getting on there? How is the great man himself?
Everything is as was said publicly when the FID was delayed, basically because the market was not, where we are convinced it's going, and that was okay because engineering continued, and so we've improved the project in that time frame, and the board will continue to look at where the market is, and we'll then decide what we want to do. I mean, the project's ready to go. They could make a decision tomorrow to go ahead and develop Tumas. So I think everyone internally, it's been reviewed, it's been reviewed again, it's been optimized, so everybody's pretty comfortable it's ready to go when the board decides it's the time. Do we feel motivated to enter into starter contracts just to show that we can sign a contract? No. I mean, we wouldn't do what some of the other greenfields guys have done. We don't see any benefit to doing that. So we'll see what the utilities do, and make decisions accordingly.
Yeah. I think there's, like I say, I've always, what this space doesn't need, what the uranium space doesn't need, is some bad news stories, because it affects everyone. So I think, obviously, I think Boss is kind of looks like they're recovering and getting back onto towards guidance. That they had that reset. I think Paladin likewise seemed to be doing the same. They've used the opportunity to raise a bit more money. Here we've got Bannerman Energy cracking on with in terms of their early works. So I caught up with them at WNA. They seem to be moving along nicely. Also raised some money. I think Lotus Resources, down in Little Malawi, so it's also good. So we need good news stories for this space for sure. Because I think Niger kind of threw us all off kilter a little bit, but mildly. There we go. Are there any other good news stories that we should be looking at? Come on, we're all about the good news.
Well, outside the demand on the supply side,
Yeah.
Again, I think it's moving forward, but not at some, accelerated pace because the
Yeah.
utilities are not really at this point stepping up in mass and doing big long-term high price contracts.
Mm.
So yeah, there's a number of suppliers that can move forward, I think. But it's interesting. Probably the loudest uh, comments coming out of Malcolm Critchley at Converdyn. He just said, we're now 3.5 years into the Ukraine situation, and he does not see the as much momentum as one we really need. It's like, yeah, well, when as Kamiko says, when the market calls for more pounds, then they're ready to produce more pounds, but they're not going to do it in anticipation of what might happen. Gets back to your comments. Yeah, well, the capacity seemingly slow to move forward. Well, then why? The suppliers have 50 years now of experience. And I think they've learned their lesson. Urenco always has had the strategy we will not add enrichment until we have the market. So they do it in modules. And if the market is not there, they won't add capacity. So, I think a lot more of the companies are adopting that philosophy. Is why would you do it and take the risk? And in fact, Kamiko Grant made a good point in the last quarterly that he's seen instances or heard of it where utilities will come in and support new production, and then we'll give you a 4 or 5 year contract, get you up and going. But then, oh well, no, we can buy Russian cheaper, and so we'll abandon you, and you're left on your own. And I think the supply sector is not totally ignorant of that. Let's see it. No off ramps. No, my reactor doesn't operate for any reason. I don't have to take this stuff. I think all those days are gone. Because if you're a new supplier, you go, well, then I'm not going to build this. I'm not going to put, $1 billion in the ground and in 5 years have, you running off buying from the Russians. So again, it's that long-term nature of the industry that's going to come from the consumers. And if they don't want to do it, then, I think they're taking a pretty significant risk in the market that we see developing. So
Yeah, and just to continue with the kind of good news side of things. Obviously, Cameco is very conservative with its announcements, and it's I guess a little bit slower to ramp things up because it's reacting to the market, but also ultimately it's also got some contracting it needs to take care of. So it'd be interesting to sort of see when they feel things will be moving again. You've got some, I guess, positive moves from the likes of Orano, despite what's going on at SMR. You're talking about they've done I think a deal with Cameco in Saskatchewan, which suggests a 15-year agreement there suggests that they will continue to operate there. They're looking in Mongolia, which is great. And I know a friend of ours, Chris Frostad, is obviously hearing and on the receiving end of increased spend by Orano in terms of exploration. So it's moving, but it's maybe not moving at the pace that investors want, but it nevertheless is moving positively forward. So it's nice to see the big boys kind of getting on with it, quite frankly.
yeah,
Yeah.
no question. But yeah, I think it's just going to take time for the managements and the boards to become comfortable with where things are going, and a lot of that will be dictated by the utilities. If they show up and say, we'll do that 500,000 pound contract at X, which is well above the current market. But at the same, and there's more and more discussion about how is the term price determined. What does that tell you when there's a spectrum of prices depending on location, the status of the supply source, on and on and on? It's a pretty broad range. And, that current number may not be indicative of what it really takes to move the supply sector forward. So,
Well, look, I think there's lots more discussions to be had on advanced reactors, SMRs, micro reactors
yep,
as well, and my favorite, which is obviously technology in the space. There's lots of TerraPower, obviously at the forefront of that. Maybe that's discussion for another day. But I think that's a nice sort of romp through some of the topics that were discussed at WNA in London and will be discussed later this month. Where is it being held? The
it's
conference?
in Charleston, South Carolina.
Charleston, beautiful Charleston. So I'm sure there's more coming out of that now. Are you going to be shuffling down there?
Oh, absolutely. I wouldn't miss it. Already setting up meetings with the utilities, and it should be, I think, again, another consequential conference for the industry because the next one isn't until April in France.
Yeah,
So
yeah.
it's 6 months away. So
Well, there's a little gathering of, I think, predominantly Aussies in Melbourne later the end of this month.
could be.
Yeah, I assume you won't be going to that one.
It's always useful. So
Always useful. Well, look, Dustin, as ever, awesome romp through a lot of topics very, very quickly, way more than we haven't discussed than we did discuss. As fascinating as ever. And we shall see what the rest of this year brings us. And more
yes,
importantly, let's see what all of these companies do with the money that they've just been raising.
absolutely. Yeah. Oh, yeah. I think it's extremely positive. So it's just a matter of how do we get it going, maybe a little faster. So,
Get the whips out. Get the whips out. That's what we need.
yep.
Right, Dustin, I love you and leave you. We'll see you soon.
Okay. Thanks, Matt. Talk to you later.